What's up, everyone? Welcome to today's daily market recap. In today's episode, I'm going to break down all my trades from the morning. And in fact, this morning, I only traded 2 stocks. Today was a little tricky. It was kind of a continuation of what we saw on Thursday and Friday towards the end of last week. Now, I was hoping that we were going to sit down this morning, bright and early Monday morning, and see an awesome stock on the scanner. And in a way, we did. We had PRTG on the top of the scan up over 65, 70%. In fact, just this morning at 6 a.m., it came out with breaking news right here, and it squeezes from about $9.50 all the way up to $15 a share. Unfortunately, it sold off back down to 12. And as it did that, it broke below the volume weighted average price, which is this orange line. So it curled back up right here at 7 a.m. And I was sitting here thinking, should I jump in this here? And what I said to myself was, it's early, it's Monday morning, let's take it slow. What is it about PRTG that creates more risk? It's a little more expensive. Taking a trade on it at $13 a share, and it's a stock that's been very active over the last few weeks. And the problem there, when you look at this daily chart, you're going to realize that there's probably people, there could very well be people who got stuck on this candle or maybe this candle who are going to be happy to get out when it's back up at $9, $10, $11, $12, $13 a share. So that creates upside resistance. And because of that risk, I was concerned that this would be choppy. Now, it's true. They had breaking news, which is fantastic. The float's less than 1 million shares. So in theory, it meets all 5 pillars of stock selection. However, what I would say on this one right now, and we'll have to just check to see, let's just check to see. So the relative volume right now is 4.48. I do have a minimum of 5, generally speaking, so it doesn't perfectly meet all 5 criteria of stock selection, but it's pretty darn close. Nonetheless, I talked myself out of that trade because I thought back and I said, well, what were my best trades last week? And my best trades last week were when we had a stock that had breaking news, 8 a.m., 8:30, 9 a.m., whatever it happened to be, where the company dropped news and the stock immediately popped up 40, 50, 75%, just took off. That's where I did the best. So this, well, it already did that, and I missed it. And instead of pulling back just a little bit, 3, 4 big candles, a small bull flag, and then pushing higher, it actually pulled back quite a bit. It retraced slightly more than 50% of the move. That's another rule of thumb. I don't like to see it break VWAP. I don't like to see it retrace more than 50% of the move. So as I was looking at the level 2 right here for potential entry at 13, the spreads, the lighter volume, I just said, no, you know what? I don't think I can do it. So it ends up going from 13 to 14.40, and I was a little annoyed. I was like, golly, I guess I could have made some money on that. But I sat on the sidelines because I didn't quite trust it. Now, what my hope was that at some point this morning, whether it be 7, 7:30, 8, 8:39, whatever, that we would have a stock that would have breaking news that would give us that trade like what we were having last week. So if we refresh to last week, Monday, Tuesday, Wednesday, we had fantastic opportunities. Monday, we had UPXI. That squeezed up 1,000% on breaking news of a $100 million private placement. Now, the terms of it were a little bit unusual in that the money's to be used by the company to buy, invest in cryptocurrency. It's like one of these things where you kind of have to scratch your head a little bit, but nonetheless, the stock went up 1,000%. Then on Tuesday, we had another big move. Wednesday, another big move. But then what ended up happening on Thursday was the moves were the biggest on Monday, and they got progressively smaller, to the point where on Thursday, when something started to pop up, it seemed like shorts were coming in real quick to knock it back down. And we had stocks that were popping up on Thursday that really didn't even have, some that didn't have any news whatsoever, but it was starting to pop and traders were jumping on it and asking questions later. Now that works in a hot market. And look, I've traded stocks that have no news because they're popping up. And at a certain point, just the very fact that they're up 50, 75% becomes its own type of catalyst. So momentum can get really strong in a hot market where jumping in and asking questions later can work. But once it starts to cool off, what ends up happening is you get the pop and then you get the drop. And so you've got to be a little bit more careful. So on Thursday, didn't see a lot of success. Friday, another slow day, but that didn't shock me because Friday, end of the week, we don't usually have companies putting out breaking news. So this morning I was thinking that we'd probably have some good headlines and that, well, we had some headlines and yet we continue to see the pop and the drop. So that made me kind of wonder exactly what was going on here. So let's go through some of these stocks that popped and dropped And we'll go over, of course, some of the ones that I traded today. So let's see. So where do we begin? So PRTG, of course, this was the first one that was on the scans earlier this morning that I was watching. Didn't end up trading that. So I'm just scrolling back here on my scans. By the way, I start my broadcast and I start trading at 7 a.m. Eastern each morning. So those of you guys that are doing the 2-week trial, you would have been able to see me this morning starting at 7 a.m. When you log into the chat room, you'll be able to open the broadcast and see my feed. So you can see my trading and everything else. So I'll put a link for the 2-week trial, pin it to the top comment, and I'll put it in the description as well. So PRTG, okay, so, SNTI. So SNTI hits the scans. This is at 7:04. And so immediately I'm like, all right, here we go, SNTI. So I'm typing in the level 2 window, and you can see this is my P&L for the day, $7,000. So I type it in the level 2 window, and the first thing I see is that big E, easy to borrow. Now, what does all this mean? Let's break it down. So CB right here stands for circuit breaker, which means that the stock is on short sale restriction, which means you can only short it on an uptick, not by hitting the bid. E means it's easy to borrow. L would mean you can locate shares. T would mean it's on the threshold list and you can't short it. 100% means if you're trading it to the long side, you cannot use leverage. You have to use your cash in your account to trade it. Now you could, if you have $25,000 of cash, it's not like you'd only be able to take one trade, then you run out of money. You could trade it 1,000 times if you want, but you can't use leverage, borrowed money, for trading the stock. And then the 300% here means if you want to short it, you need 300% of your position to take a short. So if you want to short $25,000 worth, you need $75,000 in your account. And they're factoring in that this is a highly volatile stock and there's risk that, it could go up a lot, and they want to make sure you don't take more size on it than you could cover the loss for. So when I saw that it was easy to borrow, I immediately thought, see, that's not great. Why is that? Well, when something pops up 10, 15, 20%, and when this first hit the scanner, it was actually up 38%, which is not bad. But when it's popping up initially, the fact that it's easy to borrow means you can short it without paying any locate fees. So you don't have to pay to borrow the shares. So as a result, a lot of people who like trading to the short side will gravitate towards easy to borrow stocks because you don't have the additional fees and commissions related to locating. So it ends up popping here to 670, dropping all the way to 490, then rallying back up. And I watched it rally back up and I was like, no, see, I don't think so. And I watched it break through the high, and right there is normally where I would have bought it. But because it's easy to borrow, I said, no, see, I don't know if it's gonna work. It ends up going from 660 up to 690. So I could have made a little money. Does a micro pullback, goes up to 7, up to 710, up to 720, 730. And then it rolls over. And when it rolls over, it rolled over pretty hard and ended up coming all the way back down to 5. By the way, this is in spite of the fact that it's a biotech stock with news. Okay, so that kind of surprised me. I was like, this is odd. But what it told me was that there were not enough people that were buying it. Not enough people liked it. So the volume on the green candle was only 165,000 shares, and the volume on the red candle was 1 million. So it popped up on light volume, and then from that point, sellers came in and just pushed it right back down. All right, so that's the first stock of the day, SINT, or SNTI, so not great. And then we had MYNZ, same thing. So MYNZ, this one pops up, and again, it's got news, all right? It's got news, it pops up, and what does it do? Immediately reverses. So this one was not easy to borrow, however. So I typed in MYNZ, and you can see you can locate shares to borrow, and you can also use leverage on it. So you have leverage, which is great. However, it pops up here for a second. It goes from 4, pops up to 450, and then immediately drops back down. So why didn't I jump on this the second it was popping up? So this one, it started popping up at a little bit of an unusual time. That was my issue. Typically, when you've got breaking news, they're gonna pop up right at the top or bottom of the hour. And this popping up at 7:11, I was like, what's going on? This is a weird time. And so that threw me off. So I ended up leaving that one alone, and that was the right thing. And by the way, well, actually, now let me just double check this. Let me just double check this news headline on this. Now, maybe I'm mistaken. There were a number of them today. So that's interesting. So they had news that came out at 8 a.m. But there was nothing at 7:10. That is bizarre. So actually there was no news on it. So that's probably why I didn't trade it. But in any case, it's an odd time of day. So an odd time of day pops up. There's no news, so no trade. So then we had GLMD. And GLMD, oh no, sorry. First we had BCTX. So BCTX hits the scanner. And this one, this was right at 7:30 on the dot, on the nose. So boom, it has news. And I'm thinking, okay, BCTX, but we traded this one last week. And this is one of the ones that squeezed, but then rolled over hard and had a red day. So because of that, I said, no, can't trust it. So it popped and dropped. Not shocking, because I figured there were maybe some bag holders from last week. Not all traders are as disciplined as hopefully you and I are to cut our losses quickly. So some people might still be holding it, and as soon as it pops up, they're selling to bail out. So this one was a no-go. Then GLMD pops up on the scan. And on this one, when it first hit the scanner at $1.80, actually, that's when I first saw it. So it might have been on the running up scanner. I looked at the daily chart, and I saw the 200 moving average was right here, a little under 4. And I thought, yeah, see, that's not great. Then I look over here, and I noticed all of a sudden, well, we'll go to 10-second chart. All of a sudden, it pops up from 180, 190 up to $2. And I was like, all right, well, but it's a little cheaper. So right here, it ends up breaking 2, going to 210, 215, 220, 230, 240. And I was like, I don't know. See, this is a cheaper stock. It goes from 250 all the way up to 3 to 310, 330, and I didn't trade it at all. I missed the whole thing. Then it drops all the way down to 230, then comes all the way back up to 310. And I said, I'm not buying that dip because that's too deep of a dip. A couple of people were like, Ross, why didn't you do that bull flag? And I said, well, on the 1 minute, it's got this huge topping tail, and then these, it really pulled back too much to be a good bull flag. A good consolidation is in the top 25% of the range up here. That's a flag. So having it drop down this much is not ideal. Comes back up. I thought about maybe should I, but I said it's got to break the 200. And then we just had these topping tail candles, higher volume on the red candles, higher volume, higher volume, higher volume, higher volume. It was not happening. So that was GLMD. That was news at 8 a.m. All right, so now we're at 8 a.m. and I still haven't taken my first trade. I'm like, this is not good at all. Then MLGO hits the scans. MLGO, I've traded this one before, and this is one that I've struggled with. And I feel like it's on the back side of this move, kind of like PRTG. So I just said, no, I don't think I could trade it. It pops up, does a nice bull flag on the 5-minute, and it rips from 850 all the way up to 1050. I didn't trade it. It pulls back right here, and it goes here, and I bought this 5-minute setup, and I bought for a break through the high. So I got one trade right there on MLGO for $2,800. It was sort of against my better judgment to even trade it, because I just knew this stock is just not easy, but I took the trade right here as it was coming up for the break through the high a day. So we got a little high a day break on that. Oops, reloading my chart. And anyway, so a quick little trade on MLGO. That was at 802. Yeah, I think that was at 802. And let's see, then we also had, where was it? We had SPCB. So there's a couple things. So SPCB, we also had PBBT. So PBBT, this is another one that popped up and reversed here. 2.5 million share float, had news. This was right towards the bottom of the hour. And then we had SPCB. All right, so SPCB pops up. And on this one, we can back this up here. All of a sudden, I see it on the low float scanner. And you can see how very quickly this thing ramped up from 850 up to 9, up to 950, up to 10, 1050, 11, all the way up to 1250. Consolidation right here, looking for that move higher, and then it reverses. It doesn't hold. So when this first was on the scanner, it was right in this area. It was gapping up from the previous day. It was gapping up like 10%. And all of a sudden, I saw that we had news on it. So the news on this was earnings. Okay, so record net income, 366 non-GAAP earnings per share for full year 2024. And so I thought, that's a good head. I mean, that seems like we've got a good headline there, record net income. So I jumped on it quickly and I was adding. In this one, I was adding at the $half and the whole dollar. So added, and then it goes up 50 cents, adding again, it goes up another 50 cents and adding more. Now, one of the problems here is that something that I've noticed, especially with the commission-free brokers, is that when you try to buy something that's moving fast, it feels like the way the algorithm works is that if you put out your buy order, they being the market maker at the commission-free broker, they try to jump in front of you. So you put out a big order, you'll get partial fills, and then the stock starts jumping up to cut in front of your own order. So you end up sort of getting this effect where you chase the stock higher if you actually want to fill it, because the market maker is bidding it up higher to cut in front of you. But the same thing happens the other way, going back down, where you go to sell and you sell on the bid, and suddenly the market maker pulls their order off the bid and you don't get filled. So you cancel your order, you sell on the bid again, your order doesn't get filled because they do the same thing. So it can be really hard to move in and out of these thinly traded stocks with commission-free brokers because of the way their algorithm almost seems to try to just get like one step ahead of you. So there's sort of two ways to approach it. With a commission-free broker, the approach that I've taken with Webull and Thinkorswim and, well, TradeStation, Interactive Brokers, really any of them that I've traded with, is rather than trying to jump in and out quickly, I try to take basically one position and then hold it until I start to see an exit indicator like selling. Because what I know is that if I try to jump in and out, each time I do that, it feels like the market maker tries to cut right in front of me, so I get partial fills. So I don't want to sell too soon. But on the other hand, what I've noticed is that if I wait and sell too late in the move, that all of a sudden I'm fighting the algorithm where it's going down. I try to hit the bid and I'm getting filled partially, and then the bid drops even further and I'm getting filled lower and lower and lower. I've had times where I would place a sell order, I'd have to cancel it, place another one, cancel it, place another one, cancel it, place another one, until I finally fill at the bottom. And fortunately, that rarely happens at Lightspeed. So generally Lightspeed, which is the broker that I use, and by the way, I don't get paid if you guys use Lightspeed. Use whatever broker you want. It doesn't make a difference to me. I don't have an affiliate relationship with them. But what I like about them is that their orders execute quickly and they go straight to the market. So they're not going through a payment for order flow arrangement where that institutional trader is making money off of my order. So it goes instead straight to the market. Now, there are still algorithms that participate with open market data, but it doesn't seem to the extent, at least in my experience, of what you get when you're using commission-free brokers. So with some of these lighter volume stocks, I've heard of people saying they got schwabbed, right? Getting schwabbed is the new word for you got a partial fill. And you got basically, and this is the thing that's really annoying actually, is that you'll get a partial fill when it's moving really quickly, but you'll get filled the whole share when it's going to dump. So it's like the market maker's like one step ahead of you. And I don't know if it's because of how they understand the market data or how their algorithm works, but it's like the only time I get full order, like the whole thing filled with no slippage, is when it's about to drop. And that's really annoying because it means on those worst trades with a commission-free broker, I would have full size. And on the best trades, I would have only partial size. So talk about capping your upside potential while still having full downside. And that's why generally I feel like the paid brokers like Lightspeed are better. Now, again, having said that, when I trade with a commission-free broker, I take the approach of adding early in the move and then holding kind of as long as I can before I start to see a little bit of selling. And then I try to be quick to get out while there's still strength, because I know if I wait until there's just selling, that the algorithm will take advantage of my order. And this is just the reality of commission-free brokers. It's quote free, but there is a hidden cost. It's just a bit more subtle. So anyways, I saw some people complaining about it today, so I just thought I'd just mention that. So anyways, SPCB pops up, and so my first trades were in the middle of this spike right here. So jumping on the algo spike. Now, I actually have a class called it's dedicated to market makers, the truth behind market makers and algo spikes. And we talk about how when an algo spike is occurring, what's happening is the algos are pulling their sell orders off the book. Because when a stock starts spiking and it's going up 50%, 75%, if a market maker has an order on the book, just automatically placed with their algorithm to buy and sell. They're buying on the bid, they're selling on the ask. If they have an order to sell 100,000 shares on the ask, and then the stock squeezes up $10 a share, they're losing $1 million, right? So all of a sudden, there's this huge surge of volume and buying coming in. They'll cancel their order and they'll move it up a little bit. And they cancel it and move it up a little higher, cancel and move it up higher. And in fact, what some of these algorithms do is they'll actually buy right in front of you. So they're sort of hedging. So now they're long and they're moving their sell order out of the way. And then once the sells come back in, the sell order comes back in. So there's this argument that high frequency trading algorithms create liquidity in the market. And it's true that they create liquidity when the markets are in a very compressed range where there's a lot of volume. But when you have volatility, these algorithms often pull their orders back. So in fact, they almost amplify the volatility when you've got big moves because those orders are gone. So the liquidity they create is gone. So now all of a sudden you get these huge algo spikes, which, if we're going to be honest, I'm not complaining about, because those algo spikes, like what we got last week on UPXI, are what allow a stock to potentially go up $10 a share. We had a stock, this was last year, I think it was last year, that went up. It looked like this. The chart basically looked like this, except it went from $2 to $50 a share. It's unbelievable. $48 a share, straight up. And so if one of these big algos, one of these big market makers had sold, 100,000 shares of it at $10, and then it goes another $40 a share, they're down $4 million. At what point does the market maker now have to come in and do damage control? At what point is the algorithm gone wild, right? And now they're in a real situation. So it's one of the reasons that you don't see as many market makers on the more thinly traded stocks, because they create more risk for the market makers that are making the market there. So the stocks naturally are going to be more thinly traded than something like, for instance, like a Ford Motor Company. A Ford Motor Company is a great stock to make the market on because it's relatively stable. It doesn't move all that much. You could buy 500,000 shares and then turn around and sell them. It's got 46 million shares of volume today. Who's doing all this buying and selling? Well, to be honest, a lot of it's going to be mutual funds, institutional investors, financial advisors buying and selling positions for long-term hold clients. So Ford is a vehicle, but who's sitting there every day on the bid and the offer to absorb when the institutional traders are moving in and out are the market makers. So you buy 100,000 shares, you make $1,000 across the spread. You do that 10 times in one day, you're up 10 grand, right? And so that's what these market makers are doing. But a stock like Ford, you've got a 1 cent spread, so you're going to sit and you got to wait. So you can make money on it, but maybe a market maker that's comfortable taking a little bit more risk will start to look at, like, I don't know, a Bank of America, a little bit maybe at times more volatile, or they'll start to look at, if they really, some of these stocks like IBM, this is much more thinly traded. So there's market makers, but you've got a bigger spread. You've got Apple. This has got a little bit of bigger spreads. You've got a little bit more risk on that. Then you've got your Nvidias and your Teslas. These carry even more risk, even for big institutional, hedge firm and market makers that, do this like professionally and hire the best MIT mathematicians to manage their algorithms. And then you have the stocks like, MLGO or PRTG, which, this is where you start to get into a lot of risk, or your UPXI. So it's not surprising that you don't see as many institutions making the market, and then that by itself also fuels the algo squeeze, because essentially what's happening when you get these algo squeezes is there's not really any sellers. There's not a big market maker selling. There's not a lot of retail traders selling. You just all of a sudden out of nowhere have a stock that pops up and starts squeezing. So as long as you have a strong catalyst and you have good sentiment in the market, these can make big moves. But those are your two variables. So if you've got really strong sentiment in the market, the catalyst sometimes feels like it doesn't matter. We'll have catalysts where it's like, are you serious? The stock's up 100% on that, but the sentiment is so high and so strong, it doesn't matter. Whereas when sentiment is a little bit more bearish, a little colder, even what seems like a good headline, earnings or whatever the case is, and clinical trial, the stock doesn't work. And you're thinking, it's crazy. Even with good news, it's not going anywhere. And so I think that speaks to how important overall market sentiment is in terms of what's reasonable to expect from these stocks in terms of volatility. So in some markets, and this is even like day to day, we'll see something like this where we get a 1,000% move. Now, part of this was the substance of the catalyst. The catalyst was the $100 million private placement. So that's a very strong catalyst. And anyone who is shorting on the first spike, probably gonna buy the second spike they're covering. And the next thing you know, it's going higher and higher and higher. Of course, there's people that are sort of reversal counter trend traders. Anytime something's popping up, they're shorting. Anytime something's dropping big, they're buying. And I do like to buy dips when we get those quick flashes down. I don't short into the strength because, number one, I think there's a lot more downside than upside. And number two, because I'm trading in a retirement account, you're prohibited from taking short positions. So I'm actually not allowed to. Legally, you cannot do it. They block it entirely. So, but the fact is, because there are people that take that strategy, most of these stocks eventually will come back down, at least a little bit. And so if you sell it short and add and keep adding, eventually you'll probably get a correction. The question is your account big enough to afford to continue to add while it's going against you? And what a lot of beginner short sellers learn is that once something's gone like 100% against them, or 200 or 300%, they can't afford to keep holding. And then they end up taking a big loss. You've got this stock here, Drug. Look at the daily chart on this one. This one got a lot of traders last year who were short sellers. It went from $2 to $77 a share. It's still at 30 bucks. So if you were one of the people that started shorting it at 5, 6, 7, 6 months later, it's still at $32 a share. The company had news. And in this case, it was really good news. I would say probably it's only every few months that you'll have a company that has news that's that good, that's able to really hold these levels. And the rest of the time, what we're trading are short-lived bursts of momentum, where a company has breaking news, and it is strong enough, given the sentiment in the market, to generate 100, 200% gains, but they eventually self-correct. The problem is these, if you're a short seller, are your black swans, and since they keep happening every few months, it only takes one of these to blow up your entire account. Whereas if you're trading to the long side, it only takes a couple of these to make your entire year. And then in the meantime, your MLGOs that kind of pop up and give you a little bit of action, a couple $1,000 there, or your SPCBs that give you a little bit of action there. Those kind of pay the bills in the meantime, as long as you're quick about cutting your losses and not overstaying your welcome. That's the big thing. And also recognizing the role that these algorithms and market makers play in sort of determining how big these moves will be, both to the upside when they're squeezing up and then in the reverse when they come back down. So right now, I would say sentiment, certainly today, feels a bit more bearish. We had, a couple stocks, PRTG, MLGO, that popped up. I saw there were some penny stocks. Where's the penny top gainer scanner? So I saw there were some penny stocks that were making some moves. Some traders were focusing on those, but that's not my cup of tea. So I think that given that we saw like 5 or 6 round trip rejections, and even some of them that had good news didn't hold up, probably tomorrow we're going to have to be a little bit more cautious. And so if I'm going to be more cautious, who's going to be more aggressive? Probably short sellers. They're going to feel confident because, wow, they just had a couple big wins today, maybe on MLGO, PRTG, and a couple of these others. So if they're going to be feeling more confident, they've got a little cushion, they might be stepping in a little sooner. And that'll work until it doesn't. So how do I approach things now with this shift in sentiment that seems to have occurred? So my approach now is, back to UPXI, essentially. Before UPXI, we were in a little bit of a cold stretch. So how did I approach UPXI? Well, it popped up initially and made a huge move, and none of us expected it would hold. We thought it was going to do a round trip. And then when it broke through this high right here, that's when it was game on. And right there in that move, I mean, that's where I crushed it. And I finished the day up, what, $55,000 last Monday? So, when you get a move from $6.50 to $11 a share, you could do pretty well in that. So that's what I'm more or less going to be waiting for. I'm going to be cautious, watching the first pop, let it pull back. And then honestly, even right there, that breakthrough 4, that would have been fine. And then let it pull back, let it try to fail. And the fact that it cannot fail, given the opportunity, don't assume it's going to work, assume it's going to fail. And then let it prove that it's strong enough to keep holding these levels. And then that's where I'm going to go in for that big trade. So, I've got to ease off the throttle a little bit after seeing, some close calls today. Today wasn't a bad day for me, but it could have been bad if I'd had trouble getting it out when I wanted to. Just the luck of the draw, right? And that's the thing where, the market, we know trading is risky. There's no question about that. But the fact that, imagine losing internet for 5 minutes. You're totally offline. And then you come back up and the stock you're trading dropped 50%, right? And you're still in the position. That gets scary. So I want to trade stocks that are volatile, but I want to feel more conviction that they're going to continue to go higher. And today, after seeing a couple of these rejections, I kind of started to feel like, all right, this is getting a little risky out here, especially so. So that's my plan going into tomorrow, is really watching the scanners closely, same routine as always, but being a little more skeptical. And that may mean I talk myself out of taking any trades. Could mean I don't take any trades, but I doubt it. I think they'll probably end up being something that looks good. And since it's early in the week, we still may end up having, one of these really nice catalysts. And if shorts have a couple days of feeling confident, Thursday, Friday last week, and then Monday, maybe Tuesday this week, then they might be feeling great going into Wednesday. And then all of a sudden you get a stock that you wouldn't expect it to, but it just keeps going higher and they have no choice but to cover. And then that creates double the volume, right? Because now they're covering, that's buying, and then long traders are buying. So that's what's going to fuel that next leg up. And that's, I think, exactly what we got right there. So that's a pretty thorough breakdown of, I would say, general market conditions. And so the question I ask myself when I sit down, as always, I say, what's the condition? Well, I say, did you eat well? Did you sleep well? How's your hair? And what's the condition of the overall market? And so based on the answers of all those questions, the condition of the overall market is the one that's going to really dictate right now, reducing size a little bit, slowing down and waiting for something to prove itself. Just, it's going to, the standard is lifted a little higher right now. Like it needs to cross just a slightly higher threshold in order for me to jump on it after seeing some of these rejections. So let me be the first to remind you, if you didn't already hear this anywhere else, trading is risky. My results aren't typical. So I want you guys to manage your risk by trading in a simulator before putting real money on the line. That's the right way to learn. The good news is at Warrior Trading, we offer a simulator with real-time level 2 market data so you can practice trading these stocks in real time, side by side with me, and really get a sense of what it's like. My goal is to train you, to teach you that self-sufficiency and that independence. And I'll give you a reminder, these are the books I mentioned yesterday. This was a gift from one of our students. He sent it to me from the UK. This is very kind of him. In the middle of this book, I love the illustrations. Shows you the 5 acre farm. Now, why am I so obsessed with 5 acres? Well, this is a book that I got when I was in high school, 5 Acres and Independence. It's a wartime book published during the 1940s. The date on this is 1944. And there's a quote here from Abraham Lincoln: "The greatest fine art of the future will be making a comfortable living from a small piece of land." I am such a big advocate of self-sufficiency. I was at the doctor's office earlier today and was getting my blood drawn, and the fellow said, "Did you work today?" And I said, "Yeah, I worked for a couple hours." He said, "Oh, where do you work?" And I said, "Well, I work. I'm self-employed. I just have my own, my own thing." I said, I graduated from college basically during the Great Recession. The job market was terrible, so I really only had a typical job for a very short period of time, and the rest of the time, I've been on my own. Self-sufficiency, that feeling of I can do this myself, is so important. And that's what I love about trading. Once you learn the strategy, once you've developed and honed that skill, it's like riding a bike. It's something no one can take away from you. So even if I start over tomorrow with $500, what would I do? I'd grow it to $1 million. And that's an incredible feeling. That's something that you own within yourself. And so I want to cultivate that and help you develop something for yourself. And again, financial literacy, to the extent that you use it for day trading or for long-term investing, however you use it, I just hope that I'm sending the ladder back down to you guys. So, hey, check out that 2-week trial if you haven't already, and I'll see you guys. I'll be live streaming bright and early tomorrow morning. Reminder, as always, trading is risky, so take it slow. See you guys in the morning.